Hi everyone. So I've got Tobias Carlisle here. He's probably better known to you than he is to me. So forgive me for some of the questions that I ask him because it's our first time meeting. For your interest, I met Tobias through a mutual friend. I mean, I knew of Tobias. I'd read not all of his prodigious output, but through a mutual friend, Stephen Clapham. Steve Clapham, thank you for introducing us. And I am going to dive into just a whole host of questions that I have for Tobias. But I think that the first thing I have to do is allow Tobias the right of response to my introduction. So feel free to say whatever the hell you want before I dive into my questions. There's been no pre-preparation from Tobias. He doesn't know where I'm going to go. So, but I'll give you the right of response. Say hello to my audience, Tobias.
Thanks, Guy. I have known you for quite a long time because I saw you speak at a 2010 value investing congress, either in Pasadena or New York. I forget which one. And you had a slide up, which was the Homer Simpson head with the little brain. Do you remember that presentation that you used to give? This is a long time ago now.
Yeah.
But you had, and your point was that all investors are beset by cognitive biases,
Yeah.
behavioral errors,
Yeah.
and that's been my focus too. And I loved the presentation that you gave, and it stuck in my mind. And it's one thing that I have, very much adopted as sort of a central part of the way
Yeah.
that I invest to protect myself and everybody else. So I'm very grateful to you for that, and it's very nice to meet you.
Well, it's nice to meet you too. And so, where I'm going to go first, and there are a lot of commonalities, but I have to ask you about Queensland, Australia. I've landed once in Brisbane. I have a very, very good friend from university who's a former senator, Bill O'Chee, who lives in Brisbane. And but now as Tobias told me in the 3 minutes we spent before with this started, he's in California. So tell me, why would you move from one version of paradise to another? I'd love to hear the story.
Well, I grew up in a little country town in the Australian outback. It was 6,000 people. It was like a 6 hour drive from Brisbane west, right on the edge of the last sort of bit of arable land, and then it's full on desert beyond that. And school finished in grade 10. In order to do grade 11 and 12, you had to go away to the big city. And so I went to boarding school for 2 years to an ac good academic school, went to university, did my law degree, went to a big law firm, got transferred to San Francisco, where I met my wife. And we've now moved to Los Angeles because that's where her family is from. And so we have three kids. And America is such a big place. If I was to run my business, run my funds in Australia, they'd be 20 times smaller because that's how much smaller Australia is population wise. Even though the land mass is the same size as the continental US, the
Yeah.
population's so much smaller. So it'd be so much smaller. It would be impossible for me to run my business in Australia. So in the US, it works. I can survive.
And so yeah, so you can blame your wife basically.
My
Is
lovely
is
wife.
your is the short story. Yeah, and so you know that I spent the first 2 years of my academic career studying law. You were able to study law as an undergraduate.
Condolences.
Pardon?
Condolences.
Yeah, that was the case for me. I hated it with a vengeance, such that with 1 year to go to finish my law degree, I said screw this, and I started from scratch studying economics and politics. And
I
from
think
the
it's a
inst
wise move.
from the instant that I gave up law, I became happy. Actually, I became
Me
super
too.
engaged and
Me too.
happy. But you stayed with the law for quite a bit longer because you actually worked as a corporate counsel in a number of corporations, and I'd just love to hear the story of what kind of work you did, what you saw, what you learned, what you experienced.
I was corporate advisory, M&A, predominantly, but corporate advisory means you help with any filing, you help with any acquisition, you help with any capital raise, um, help with any sale of the company for big businesses. So I was a very small cog in a big team, and I was often the most junior man on the team,
Yeah,
which means you do a lot of diligence. You're in the sweaty data room. I think they do it all online now. When I was doing it, you actually had physical copies of all of the documents, and my job was basically to manage the data room for these huge acquisitions that were going on. So I was a long
yeah,
way from making any decisions. The most exciting thing that ever happened to me was I had they had this $7 billion acquisition, and there was a $50 million divestment of this little crumb off the edge of it, and they let me run it, and that was the most exciting thing that ever happened for
But
me.
was the law firm, can you name the law firm that you were at?
Yeah, it was. I was at two. I was at Cause Chambers Westgarth, which is an Australian firm, and then which is a national Australian firm, and
Yeah.
Minter Ellison. There's been this revolution in law in Australia for a long time that they weren't able to be owned or partners with foreign law firms, but that law changed after I left, and so they're either Golden Circle, which is the London. They all have the same names as the Golden
Yeah.
Circle firms in London, or they're I forget what they call it, top American firms, but Skadden Arps has an Australian office now, which used to be
Yeah.
something else. So
Yeah.
I've kind of lost track a little bit of who is who, but I think
Right.
those two firms continue on independently.
But
And so
you were working at a sort of like a white shoe, well known. I mean, it would be the equivalent of, as you said, Skadden Arps and other names escape me,
something like
Kramer,
that.
Levis, Naftalis, and
I don't want to pretend like it's that sort of scale because the Australian firms are a little bit
right.
smaller, but it's the same idea.
Well, if you're doing a $7 billion acquisition or divestment, then and a $50 million crumb
From
was what you got to run. And when I graduated business school, I had the option, the possibility to go and work at one of those larger firms. And I really regret not doing it because the different perspective is that you say something along the lines of, yeah, all I did was operate a photocopy. I was a glorified photocopy operator. But the key in life is to know which photocopier to operate. And if you're operating the photocopier or you're running the data room at one of those firms, you just see a lot of stuff. You just see a lot of stuff. And
That's right.
so the subjective perception is that um, you're not learning anything, but the reality is that you're learning a lot. And so I guess my next question for you is, I'm really curious to hear about um, well, there's the personal life, but I guess we should stay on the professional side with the greatest of respect to your wife. How you transitioned from being a lawyer to being an investor.
I had wanted to get out pretty soon after I got into law. The hours are very, very long in M&A, and they're very, you know, the terror of being a lawyer is you don't have enough billable hours in any given month because you're in a lull or you're working 100 hours a week. And that's not conducive to having much of a home life. And so I had quickly realized it's great. You get 5 years of experience in two. And then I was 3 or 4 years in. I had listed a company in Australia that was a telecommunications infrastructure company. So they had a peering network, dark fiber data centers, subsea cable, that kind of thing. And we bought them and built them, did all sorts of things like that. And I just didn't like the hours. So I went in-house counsel. They had a relationship with a guy who had funded them, who was also an activist who had, pointed out to them one of the quirks of that particular business structure is that you're depreciating assets. So your cash flow doesn't really match your accounting earnings very well. That's what the business is. You're
Yeah,
depreciating these things over long periods of time. So
yeah,
you're able to pay a dividend because you've got the accounting earnings there, but you're cash flow negative. So you're constantly raising money, paying dividend out of non-existent cash flows. And so they would sell themselves, say, we're an infrastructure company that can pay a dividend, but on the other hand, they're cash flow negative. So we're always doing capital raises. He had just pointed out the absurdity of doing that. They had good reason for doing that. It was because the optics from outside in the market were that made that company much more stable than it probably otherwise was. So I thought that was a very insightful thing that he had observed from externally. And I went and worked for him for a little bit of time just to learn the business because I wanted to transition out. And then, my wife and I were getting to that point where we were going to have kids and we had to decide where we were going to be. So women tend to win out in these things. I've come to learn. And so we moved to the States. I set up the business here.
yeah,
And that was basically the transition. So my introduction to value was really through activism, through pushing buttons to get people to do things. There's a lot more. The Australian framework is much like the Canadian framework. You can compel companies to do things as an individual shareholder with a handful of other shareholders. And so those are very useful tools to compel EGM, extraordinary general meetings and so on. So
yeah.
we did that pretty effectively.
But just to understand, you were in-house counsel at this company, and an analyst tells you this doesn't add up, and you hear him and you go, "He's right, it doesn't add up. Let me try and understand where he's coming from." And you discovered the external investor's perspective effectively. Did I get that right?
I had read Buffett,
Yeah,
and so I had read all of his letters. I'd read every book that I could find. I'd read Security Analysis. I'd read all of those things. I read the original one, which is
right.
really, you got to grit your teeth through that one. I've got the
Yeah,
most updated one now, but I did start with the original one. And so I was already primed for that. And then when he said that, I thought that's exactly right. That observation is true.
right.
I
So,
understand why the company's doing it too, but I understand he's right.
so you're a guy with the legal training who's discovered Warren Buffett, and you're like, "My God, this is way better than anything I'm doing here. I want to be doing something that looks more like that." The
How
same, the
could you not?
same. Pardon?
How could you not? The
Yeah,
the the
exactly.
the
But
idea of thinking and working through these problems really appealed to me, rather than sort of having this, rather than being like harrowed as
yeah.
the young lawyers are.
But then just to understand it, your step is I'm going to set up my own firm. Did you consider, I'm going to go work as in-house counsel at a fund management firm. I'm going to go to New York City and get a job at Wayne Conniff or Treaty Brown. Uh, you know, I'm going to write to Warren Buffett and see if maybe he'll let me work for him. I'm going to try and find him companies to acquire in Australia. Did you go any through of any of those thoughts?
I tried to go through the investment banking route in San Francisco, and I tried a few of the Thomas Weisel partners and a few of those. I got through to the very last rounds
Yeah,
of many of these interviews, but I was never made an offer. And it just, my background is in law, that they couldn't really work out why I wanted to transition over, even though I wanted someone to give me 2 years of the same thing that I'd had in a law firm. I really wanted 2 years of 100-hour weeks
yeah,
learning that side of the business.
yeah,
You can do that yourself, but it is nice to have more
yeah.
experienced people telling you that in any case it didn't work. So I was kind of forced to become an entrepreneur when really what I wanted to do was become an analyst.
Yeah, and you know that there's a parallel there for me in that. So I've done 2 years of investment banking. Well, you've probably read in this horrible place, and now I want to go and get a job as an analyst, and nobody's going to hire me either. Although I met some really, really nice people along the way, and so I was in a way forced into doing it on my own with, in my very lucky case, some family backing that helped me get started. And so, how did you get started once you got to that position?
I set up in Australia first with a unit trust and raised some
Yeah,
money from family and friends. And some of the people who I had worked, the two gentlemen who founded the dark fiber firm that I had started have become very prominent, successful businessmen in
yeah,
Australia, very wealthy. And one of them backed me into this thing. I had some friends and family money and a few other things in that to get started. And I had a few years in Australia. And then I realized that there was no way that anybody was going to invest in America. No one was going to invest into an Australian unit trust. That was a non-starter. So I set up an
yeah,
LP, which was, again, that's a difficult structure when you're dealing with often doctors and accountants, sorry, doctors and lawyers. And I would give them this 260-page limited partnership agreement with the subscription. And I can't read through this thing. And the discussion would stop at that stage. So I was looking for a structure like an exchange traded fund type structure. But it's again, to get into it, the cash burn once
yeah,
you're in is substantial. So you need to be able to cover that. And for a small businessman, for an entrepreneur, it's really virtually impossible to do that. But I've sort of figured out that I had enough of a profile through Twitter and through a few of the books that I thought I could get there.
yeah.
And so I was fortunate that I did. But I lost money in it for the first 18 months. And that 18 months ended right when COVID kicked off. So it added another 6 months, tacked on another 6 months of losses in that business.
So you got into the business, and I want to get. So you wrote about books, and I'd wanted to go to your prolific book output, but tell me because I want to know. So so you went so unit trust in Australia, and then well,
Limited partnership in the States.
you did that, and but now you're in a exchange traded fund.
That's
I
right. I
guess
have
let's
two.
just
Yeah.
stay with it briefly. Tell me about the funds that you run, and then I want to go back to your writing. But but seeing as you already took me there, tell me about. Well, I'd love to just a little bit more. So, unit trust in Australia, not going to work. You have a wife slash girlfriend, future life partner in the US. You go to a partnership structure, private partnership, 300-page documents, and this is not working for you. And just what you need somebody to sit on the phone with the subscriber and walk them through all those ghastly pages, which are there for
Right.
their protection, but they're actually there to protect the financial services industry from entrepreneurs like us.
That's
But
right.
that's a whole other
That's
story.
right.
So tell me about so did you shut down the partnership?
I did. I shut it down to transition folks over
Yeah.
to the
So t
exchange traded fund. And I
tell me
explained to
about
them
those
lower
vehicles.
fees. The 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 current ones, the ETFs.
Yes.
I have two. I started my first one was ZIG, ZIG. It's the Acquirers Fund. It's domestic US equities only, long only. It started out as long short. Um, and I don't I was short through all of that craziness of the COVID dip and then bump where a lot of those Melbourne Capital and so on got blown out. I didn't mind shorting through that period of time, and I know I'm not like an activist short where I'm going out and talking about the shorts. I just did it. They're businesses that are completely broken, that are reliant on outside capital. I think that's a very good place to short, but it does introduce this metaphysical risk of blow up at some point. And so I had this sort of change of heart halfway through, and I decided I didn't want to do that because I could see that was happening to those other guys. I was short to a very 1% per position rebalanced on a quarterly basis. Often, if it's going against you, just rebalancing out of it's not a problem. But
Yeah.
there is a risk that something goes to infinity and you're blown out. And I just didn't want to do that anymore. So I got rid of the shorts and I went long only. And then of course that was 2022 when the market fell over immediately. So my timing is terrible. My macro
Yeah.
takes are awful. My
Yeah.
timing is terrible. I've just sort of come to terms with that, that I
Yeah.
have no idea what's going on economically or in a macro sense. But I think if you buy very, very cheaply, and when I say cheaply, it's not purely price ratios. I'm trying to buy a business that I think is worth more than where it's currently trading. And I'm skeptical about my ability to make a determination that is distinctly different from what the market is doing. And so I know that there are going to be a lot of errors, and my historical error rate is about 50-50. It's just that
Yeah.
the company, and this is on a quarterly rebalance basis. So it's basically noise at that level, but the ones that work tend to work much more than the ones that don't. So
Yeah.
the two options, I always think about it in these terms. If I'm buying these things and the market is correct and I've paid full value for it, in which case I won't make much, I won't lose much. Or alternatively, the market is wrong. And when the market figures out that it's wrong, often these things get a big bump. And so
Yeah.
that's where I how I run the funds, and that's what happens
But
usually.
that's Ziggs. There's another vehicle as well.
So Zig is the largest 25% by market capitalization, which you can think of as roughly the Russell 1000.
Right.
And then Deep is the smallest 75%, which you can
Right.
think of as roughly the Russell 2000.
Right. And I'm curious if you're willing to go there. The mechanics of setting up an exchange traded fund, the capital cost to set it up, the ongoing running costs, and the decision, I guess, to move away from because there are some advantages to having a private LP, despite the very, very long prospectuses and what have you. So I'm just curious to hear how and actually I'm just genuinely curious because I've heard people talk about running exchange traded funds. I once looked at setting up a mutual fund. I attended a talk by a very famous value investor from Short Hills, New Jersey, whose name escapes me. And he talked to us and he said, "You guys are all setting up hedge funds, should set up a mutual fund because you get residual value in the business, whereas in your stupid hedge fund, once you're done, once you want to stop, there's no residual value in the business." But when I looked at the cost and the difficulty of setting up a mutual fund, I just said that's going to be really, really hard. I don't want to do that. But you went in that direction. I'd love to hear about it.
The the cost varies, but the cost to set them up is $50,000 per fund. Not extreme relative to probably limited partnership is in that sort of ballpark as well. It might be a little bit more expensive than a limited partnership, but the ongoing cash burn is the problem because these things like it very much like a mutual fund. It's just that it's traded live, so they all through the day the NAV has to be updated, has to
Yeah.
be, and then there's a market maker that trades where the mutual fund can do that themselves. Um, it costs about $250,000 a year to run them, and that's real. That's because it's $250,000 worth of man hours in compliance in the back end where that's really going on. And then you have firm costs. So that's the fund cost. Then there are firm costs for compliance, which might run another $50,000 on top of
Yeah.
that. And then you have every other cost of a fund on
So
top of
there
that as well.
there are service providers who will provide the kind of like the plug and play for those ETFs. And I guess the trader needs to know what you're buying and selling through the day so that they can figure out, because they want a sort of like a minute by minute update of what you're exposed to. If at 10:30 you suddenly go long oil or something or short Apple, then they need to know about that, I guess. Is that right?
Well, here's an interesting thing. I remember you saying a long time ago that you don't trade during market hours.
Yeah,
And I do the same thing
right.
because I I'm a terrible trader
Yeah.
and I
So
I find it incredibly frustrating chasing prices. Is that
actually, I mean, you didn't ask the question, but I would tell you that I don't trade during market hours, but what I do now is, so this is like my book's almost 10 years old, is that I can't trade without doing a pre-trade check, which is kind of like our sort of part of our
what
compliance process. And so the pre-trade check gives parameters to the CFO who does the trades, and I just give parameters, and then all the trades are executed by them. So I sign off on the parameters of what I want to have happen, and then I don't even the it's kind of like the trading is a bit like somebody doing surgery. I don't really want to look. Maybe once he's sewn up and out of the room, I'm happy to look, something like that. But
I couldn't agree more. I have a trade desk, so I have a sub advisor, which is in my there are lots of different ways of doing this, but I have a sub advisor who is basically a trade desk, and I
right,
give them my preferred position. Oh, this is my ideal portfolio,
and then
and
they
then they
they
trade the
make it
portfolio
happen.
for me. Yeah.
Mm. And and I guess the upside to that is that anybody can look you up and go buy or sell. But is it daily liquidity,
It's intraday liquidity.
intraday liquidity? So obviously somebody can buy or sell the ticker, but how regularly do they open and close? So there's two aspects to it. There's the price of the security and whether it's trading at a premium or a discount to its underlying NAV. But then you can open or close it. If presumably if it's trading at a slight premium, you'd allow dollars to flow in, and if it's trading at a discount, you'd allow dollars to flow out. How does that mechanism work?
My sub-advisor interfaces with the market maker. So there's a lead market maker, and then we have three or four other market makers as well. And when there's the fund is always as liquid as the underlying securities, which in Zig's case is the largest 25%. So very, very liquid. And particularly because we're a small fund, we're much, much smaller than anything we're trading. We have no liquidity problems at this point.
Issues? Yeah,
That would, I would, that would be a great thing for me to finally have some liquidity problems.
right.
Um, the the uh, the fund itself, the market maker sets a little bid ask spread around, and so it's you could buy in the morning and sell in the afternoon. You can buy before lunch and sell after lunch if you so
Right.
desire. When the market maker ends up being long or short the fund, if there's too much buying or selling pressure, and then they convert that long or short position into if they're long the fund, they will redeem for the underlying.
So there's automated mechanisms to do that at the market maker effectively.
Yes, and I
And
get a message saying you've got to create a redemption, but I don't really have
right,
to deal with it. The sub advisor is the one who deals with
right.
that.
And so, and we'll move on for somebody listening who's not interested in the mechanics of managing money. I spent some time examining the structure of mutual funds here in Europe, and the word that comes to my mind is SICAV, but I'm not using the right word. And the thing that was really scary to me, it was really scary to me, the daily liquidity and the fact that when liquidity happens, the money flows straight to the sponsoring bank. It doesn't flow, so the banks are controlling the cash flows in and out, which is very nice for the banks. But it meant that I was kind of an appendage of the banks, and that really, and some banks came and they said, "Look, we'll take your whole fund structure and we'll convert it into I don't remember the name. That's terrible. Effectively a European
UCITS,
UCITS. There we
UCITS.
go.
That's
Very good. Thank you. And I realized that I would have been giving up the real relationship with the clients. And so I'm curious. You forgive me for it might be a sore point, but you live in daily fear of the clients. I mean, that you could get mass redemptions one day, or the opposite. And how do you live with that actually?
the I set the portfolio, and so the sub-advisor, if we had a huge inflow, the sub-advisor would simply trade that portfolio pari passu equally across. So the fund might start the day at $20 million and end the day at $40 million. And because all of those positions are so liquid, we probably wouldn't even move the price
Yeah,
as we moved
yeah,
in and out of those positions. That's never happened to me to that extent. I think the biggest daily redemption I've ever got is about 5%,
yeah. And
which doesn't feel good.
but for what it's worth, for anybody who's interested, I was checking through some of the accounts, and it looks like you've got a very healthy business, and that the AUM is growing nicely. So, and it doesn't surprise me. I mean, you're a personable, smart guy that everybody should trust, and you've got the right frameworks, and you're doing the right thing. It's interesting. I mean, I was talking to Monish Pabrai, and he was talking to me about somebody who started like you and is now running like 100 billion. And I don't think that I will ever run, I may never run more than a billion, and and there's some, to the extent that that's something that one's interested in doing, there's some extraordinary economics there, if you end up doing that. And watch this space, because that might be Tobias Carlisle in like 1 year.
Oh, I would say that I think about I try when I talk to investors, the singular thing that I'm interested in finding out is how do they think about risk? How do they think about blow up risk? I really don't care about how they think about the upside really does take care of itself.
Yeah.
But there are a million ways to die in this business. And I'm singularly focused on surviving. This is a
Yeah.
business with a risk of ruin, a
Yeah.
real risk of ruin in it.
Yeah.
And if you don't appreciate that, you don't appreciate what this business really is. And I think a lot of young guys don't appreciate that. There's this great Confucius says that a man lives two lives, and the second life begins when he realizes he only has one. And
Yeah.
young men are invincible. They don't
Yeah.
appreciate that aspect of it. And I was certainly guilty of that as well. And I had that realization through COVID, turning 40 with little kids, running a business that was losing money. I thought there really is some blow up risk here. There's a risk of ruin here. And I need to reassess how I'm running my
Yeah.
business, how I'm running my funds, how I think about all of this stuff. And that really did, that was when I took off the shorts. And I now approach the problem like, whatever happens, I'm going to be here tomorrow. You know,
Yeah.
uh, eh, I'm not invincible, but I'm not immortal, but whatever is in my control, I will control.
And the so there's somebody that I've interviewed. He came to my Value X conference that I very much urge you. Well, I'll ask you, I guess. Have you come across the word ergodicity or Luca Delana?
Yes,
And he's just a lovely guy, by the way, and certainly he will talk to you if you want to talk to him.
I'd
And
love
I've
to.
got him. He's coming to Berkshire Hathaway this year, I believe, and I'm going to give him a 5 minute slot in this kind of mini Value X that I run there.
Well, I will be
And
there, so I'll try and track him down.
and forgive me for the listener or the viewer, and forgive me because I'm so taken by. He had a crowd of people around him after his presentation at ValueX, but he has this wonderful line: "It's not the fastest skier that wins the season; it's the fastest skier that doesn't get injured."
Right.
And he can run these numbers where he can show you that, and the difficult part is that if it's easy enough to stay that and to nod at it. But now you're the skier and you're running the first race of your season. And the question is, how hard do you push yourself? And there are all these pressures to push yourself beyond what is optimal because you really do want to win the race. But if you push yourself, even if you are technically the best skier, if you take the risk of injury too high over the course of 10 races, you're actually behaving suboptimally. Long story short, survival is everything, and it's nice that you figured that out. It is everything. It is
Buffett
absolutely
makes
everything.
Buffett has the same observation, of course. He says that the fundamental rule of motor racing, I think, is the analogy that he uses, is that to win the race, you must first finish the race. And that's my
Yes,
observation too. And I
yes,
think Morgan Housel has a similar thing where he says, and my co-host on my podcast, Jake Taylor, has this wonderful thing where he says, everybody knows the present value calculation, which is 1 plus R to the N,
yeah,
and everybody is singularly focused on maximizing their R.
yeah,
And he says, I am singularly focused on maximizing my N.
right. So
And
I met
that's
Jake recently. We had a lovely conversation. It was in St. Louis, Missouri, at Tulipomania, and and when I first talked to the group about my returns, I was slightly embarrassed because they're high single digits. And they were like, that's great because I've been doing this for 25, more than
right.
25 years and survival is everything. So I don't know how to do the good segue, but I'm going to just sort of go back because I want to talk about writing. And you've been a prolific writer. And I should tell you that early on in my investing life, I met and became friends with Alan Bonello. So,
Right.
you will have known him. So, I've got some of, for those of you who are watching this on video, this is one of Tobias's
Concentrated
books.
investing with
Yeah, and
Alan.
here's another one of Tobias's books, and I don't have all of them here.
Quantitative value. That was with
Yeah,
Wes Gray.
pardon?
That was with Wes
Yeah,
Gray.
and then here's another one of his books. So you're a
That
prolific
was mine.
writer. Tell me about writing and when you started and all that jazz.
Well, obviously, I believe in quantity over quality, so I get a lot of them out there. Um, I cannot,
Quality and quantity.
I cannot think about something until I've written it down. I think Buffett has said something similar, but I find this to be true for myself too. I don't really understand it until I've written it down to explain it to somebody else. And it is funny the number of times that I think, oh, I understand that. Ergodicity might be a good example. I understand ergodicity. Write that down and try and explain that to someone else. I don't quite understand ergodicity
Yeah,
until I've gone through that process. Here it is sequentially. So I learned to write. I liked writing in school and college. I learned to write as a lawyer because here's the active voice, here's the passive voice, write actively. You cannot have two interpretations in this thing that you're going to write. If it's a
yeah,
contract or if it's a letter of demand or whatever it might be, it can only be interpreted in one way. So once you learn to write like that, it adds some precision into your writing, which adds some precision into the way that you think as well, I think. And so I use it as a tool to tease out. And so I've just finished another book now, which is called Invincible. And because I've read Sun Tzu every 5 years or so since high school. And
yeah,
I've always thought I cannot understand what people see in this book. I really think it's an emperor's new clothes type thing where
yeah,
everybody says, "Oh, this is a wonderful book," and it's been very helpful to me, but it's never really been very helpful to me at all until I went through that COVID pandemic with the business, and then I read Sun Tzu in there, and there's a thing in there that I had never seen before and hadn't really appreciated, and that is that Sun Tzu is dealing with a risk of ruin, and he's very explicit. It's the very first thing he says. This is a game with a risk of ruin, and if you don't pay attention to it, then you'll be ruined. And then he goes through all of the things that he thinks about to avoid the risk of ruin, including he says you have to follow the moral law. There's two interpretations of the moral law. One is that it's just what it sounds like. Behave morally, virtuously, honorably. And then there's another interpretation, which is that it's the way, the Tao from Taoism.
Hmm.
But then if you read a little bit of the Taoist literature, they're clearly saying the moral or it's their version of the way is the same thing. It's behaving honorably and decently. And they were sort of Enlightenment type, Stoic types who were writing under an oppressive regime, saying this
Yeah.
would be a better way of conducting ourselves.
Yeah.
And if that's not Buffett, I don't know if there are the two key things that I think of when I think of Buffett are we're never going to blow up, we're going to run this thing with no risk of ruin, and we're going to behave honorably, whether that is legal or not. We're
Yeah.
more honorable than we are lawful, and
Yeah.
that's got them into trouble on occasion, but they're trying to behave as honorably as they can, be a genuine partner. Sun Tzu spends quite a lot of time talking about that, and so does the other Taoist literature. So I thought that's really amazing. And then I went through, and there are so many parallels that it became I thought this is an interesting idea. And so I've written the book, and it just looks at the very many ways that I think Sun Tzu is misinterpreted. Many think of Sun Tzu as being deceitful or as being ruthless, whereas I don't think that that's true at all. I think that's sort of a slight misreading of what Sun Tzu is trying to say. I think that it's pretty clear that he's saying exactly that. There's a risk of ruin here. We have to behave honorably. We have to
Yeah.
be very, very careful about the kind of situations that we get ourselves into. We don't
Yeah.
want to walk into he says, he who first fights and looks for victory will be defeated because he's saying, don't buy the stock and then try and figure out how it's going to work.
Yeah.
You have to know how this thing's going to work
Yeah.
before you put yourself in the position. And then look for the risks of ruin, look for asymmetric positions, all of these things. It's an incredible book,
Yeah.
and I had just missed it.
Yeah. But so tell me, the most painful thing I've ever done is write. Maybe not the most painful, but it was really hard for me to write that book, and it was very rewarding. But I want to hear about how you write, when you write. You've told me that you don't feel like you really understand something until you've written it. But I'm sure you're aware of Vitaly Katzel-Nelson, who's got this incredible writing discipline every morning at 5 a.m. Um, what is your writing discipline? Having written a number of successful books, what role does writing play in your life on a day-to-day basis? And then I have some follow-ups.
I think I've read that other authors who say it's a little bit of a compulsion, and I think that's true for me too. It's a little bit of a compulsion. I get that earworm, and I have to sort of set this thing down, and I can write a lot, 10,000 words. It will come out very quickly, but then it'll just be dry for a long period of time, and I get nothing
Mm,
at all. And I'll return to something that I've written previously, and it's just absolute garbage. I think that to be a good writer, you need to be a good editor. I think it's easier to be an editor than it is to be a writer, but to get the first draft of something down is incredibly painful
yeah,
and difficult. And I
yeah,
might write 300,000 words to get 100,000 or 80,000 that are sort of
absolutely.
useful or good. And so a lot of that compulsion is just, I often think that's why I think it's a compulsion. I'll write
Yeah.
10,000 words and then return to it and just, what was I thinking when this is just silly, just
So you
nonsense.
do you write daily or weekly? Do
Not
you write
quite.
for the sake of it,
Yes,
or
I will
or is
wake
it
up in the
come in
middle of the night.
waves?
I'll wake up and I'll be thinking about something and I'll chew on it for a long time. And then all of a sudden it just comes out I'm almost transcribing what
Yeah.
the little voice in my head is saying.
And you feel better once you've written it down.
I need to wait a period of time because I'm always when I get it down, I think, oh, thank God I've got that out. And then I need to come back to it subsequently. And that's when I know whether it was good or not. Because in the moment, I often think, oh, at least it's out. That was good. And then I come back and I think that was silly. It was nonsense.
And then just to for those people who are interested in writing a book or might be writing a book, I'm curious to hear your take on, I mean, I think that you've gone both routes. You've gone self-publishing for some of your books. You've been published by well-known,
Wiley,
yeah. Which is your preference? And
I
what,
I was very eager to have the imprimatur of a publisher on my first book because I thought that would make me a real author. if I put this thing out there by myself, then no one's said that you can do this. And after I'd done it 3 times, I thought there's they're really not doing. I'm promoting these books. I'm putting in all of the effort. They helped me design the cover, but I I I have particular design preferences, and I like to do I like the whole book. I like to do the layout. I like to do the cover. I like to write, and
Mm.
so I just self-publish these days. I really like the guys at Harriman House who've published Morgan Housel's book, and I would like to do something with them. It's just that every time I get to the end of the book, I think, I should carry the burden of this thing myself. It's not fair to sort of
Yeah.
inflict this on someone else because I don't know whether the one that I've just written, I don't know whether people might think I'm a complete lunatic when they read this thing, and I don't want
This
to
is
have
the this is the Sun
Invincible.
Tzu book.
Yes.
Oh wow. So when's that coming out?
Well, as fast as I can turn it, I've written it and I've read, and I've now, it's been sitting for, I've read it again. I read it again yesterday, and
Yeah.
I don't think I can improve it beyond this point, which is not to say that I love it. It's just that I don't think I can, it's as good as it's going to get at this point. And so I'm going to try
Um,
and get it out pretty quickly.
I'll just give you my, so I have the, I think it's the complete diametrically opposed perspective, which probably both are true. You just have to figure out for whom, what I'm going to say is true for people of one kind. And so I am very grateful that I have an agent. And that agent, by the way, is a guy called William Clark. He's amazing. And I'm very grateful that perhaps my first and only book was published by a recognized publisher. And I might have gone with Wiley and ended up going with then Palgrave Macmillan because what I was really I know that I did the right thing for me when I read a book about the super agent whose name always escapes me, and I feel like I want to look it up. He founded
Moritz or something like that.
Michael Ovitz. There we go.
Ovitz,
Almost.
Ovitz. Thank you.
And what I realized was that what I realized from the book and that from Michael Ovitz's book, which is for movies primarily, but it also applies to the literary world, is that um, and it actually helped me to look at and understand a little bit more about companies like Universal Music and Warner Brothers and Spotify and other distribution channels, is that um, talent is in very, very limited supply. The creative process is subtle. You can never guarantee a success of any piece of creative output like your books, my books, William Green's books. And but the talent that pulls that thing together and increases the probability of success is not easy to get a hold of. And what agents do is that they help to orchestrate the talent that will pull all of those resources together that improve the likelihood of success of the book. So my experience on my book was that I had a manuscript, and then there were three different people who only got involved really because I had an agent. Uh, One was the editor at Palgrave Macmillan, another was William Green, another was Jessa Gamble. But then, so those three different people came together in different ways to help me to assemble. Yes, I'm the author of the book. Yes, I wrote the original manuscript, but then we had a copy editor that fact checked the book. And then, from within Palgrave Macmillan, somebody typeset the book. Typesetting a book's an art form. Writing an index for a book is there's a way of doing it that gives the book meatiness and substance. So I'm very strongly in favor of using those resources, if you like. There are 1,000,001 Dua Lipas in the world, but there's only one actual Dua Lipa, and she will have been developed over a decade or two by an agent and by a manager and by a record label, and it comes down to this in the case of musical talent. So you have a Dua Lipa and 1,000 other complete lookalikes of Dua Lipa. And now a space opens up at the O2 Centre in London. And the O2 Centre are going to call up one of three agents and they're going to say, a space has opened up. We need somebody who fills these characteristics. And if you're not one of the artists signed up with one of those agents, you have no chance. And anyway, so there's a very subtle process by which artistic credibility gets built. So anyway, that's kind of I've gone a little bugbear on, but I'll give you a chance to respond to that because maybe you vehemently disagree before we move on to my next topic. But so respond because maybe you get
Well,
the last word.
I couldn't disagree with your success in that regard, Guy, and that's a wonderful book. I really enjoyed writing it. I
Read it.
enjoyed reading it. Excuse me.
Freudian slip.
Um, I just sort of take this. I'm very much a an individual creator type. I sort of I feel like the idea is I just couldn't inflict it on somebody else, and I just rather I can put it out over my podcast. I can make it available in Amazon. I can write about it on my
Yeah.
blog, and people who are interested can read it.
Well, you've
And then,
heard you've the audience has heard the other view to be discussion to be continued. Where I want to go next, because I'm kind of running into time constraints, is I printed out one of your portfolios, and I just thought it would be fun to. So I'm holding this up to the screen, and I kind of this is publicly available information, so I'm not revealing anything that is not available. But I just thought it would be fun to try and understand your thinking about some of these ideas. And I guess we can't stay with them for very long. But one thing that was interesting to me is that you own energy, and in particular coal companies, and in particular metallurgical coal companies. And I'd
right,
love to hear, if you're willing, what your thinking is around those.
the the green revolution requires steel, and steel requires energy, met coal. There's very little new coal coming online. So supply is constrained, demand is there. They have been trading very cheaply. They've had a pretty good run over the last few years. I've probably owned them for a few years now. I'd say, yeah, I'm not entirely sure, but at least 2 years, I would say. And so I think that, I'm driven by financial statements more than I am driven by narrative. So my decision for buying those things would have been that they were earning fairly well in the preceding 5 years. That was not recognized by the market. They were trading too cheaply. And my view was that if that situation continued, if the last 5 years look like the next 5 years, they're simply too cheap. That cash flow has to go somewhere. They'll retire stock, they'll pay dividends. The stock will probably respond. That was I'm very much I like a very brief thumbnail description. Going back to the discussion that we started with the behavioral errors and the cognitive biases, I really do think there's a handful of factors that influence the performance. And beyond that, it's sort of unknowable. And I can continue to research. And I get to this point where, there's very well-known studies where one is horse race handicapping and the other one is college students being asked to predict which football teams will win. And they give them the professional horse race handicappers or the college students. There are 25 pieces of data about these different horses or college football teams who will win, and they divide them into groups of five. So everybody ultimately gets the same data. They just get it in a different order. Some people get the first 5 bits of information first, and some people get those 5 bits of information last. And they're asked then to make a decision on which horse will win or uh, which football team will win the competition. And they make their decisions based on the first bit of information that they receive. And then they update those decisions with the data, but they very much anchor onto the first part of the data that they receive. And so what that leads the researchers to conclude is that we anchor on the first stuff. We have this sort of bias for that. The first data that we receive is what we anchor on. We don't update in a Bayesian way, which we should be doing as we go along. And there's one other thing that's slightly escaping me now. Yes, our confidence increases rather than our competence with those decisions. So we become increasingly confident because we only
Yeah,
take in the information that agrees with our view
yeah,
and we ignore anything that doesn't agree with our view. And so they can detail how the confidence goes up and up and up, but the ability to predict goes down slightly over
Yeah.
the. So I'm quantitative largely. I do the research beforehand, what has driven portfolio stock returns in the past, assuming that the future looks like the past, which we don't know that it does, but I'm going to assume that it does, then that's how I'm going to make my decision. So I use a handful of data points, put those positions on. If I'm wrong at the next rebalance date, I'll just take my lumps and move on to the next thing.
But it sounds to me like you pick those companies based on a sort of like uh, you know, earnings measures, price to book, price to value measures, their market performance or the stock price action, rather than some overall grand view of your vision of the coal industry, let's say.
No,
But
there's no macro. There's no macro at all.
yeah,
I have a holistic analysis of I look at what are they earning, what are they earning on their assets, what are they earning, what are we
right,
paying for that? If
right.
there's a big disconnect between what they're earning on their assets and what we're paying for that, then that's a good opportunity. And
And
I'll
so,
try that.
yeah, yeah, and so what you're doing is you're creating a process that, in a way, is potentially replicable. If one day you want to step back from actively managing the portfolio, you'd be able to step back from it and allow some, because you'll have created a process basically that people are following, can follow. You following the process, but others could also follow the process.
Very much so. I think of
Yeah,
myself as sort of like the priest who just continues to make sure that the catechism is said in the right way and we follow the
right.
rules. Anybody can do this under this system. Yes, it's not relying on any great insight of mine. And I think that that's an advantage when you get a March 2020, you get something that's I'm as susceptible to, maybe more susceptible than other people to. I get sweaty when the market goes down. I get nervous. Is this the bottom? But this way I can function, I can run the portfolio, I can put these things in, I can keep on going. And there's no question that we're going to be executing appropriately at any given point because we've thought about what we should be doing
Yeah,
well beforehand.
yeah. It feels to me like a kind of a sort of like what Tweedy Brown would have done for much of the life of their fund, or a Canadian guy called Peter Cundall would have done.
Or Walter Schloss.
Yeah,
So that sort of approach where, yes, very much so. We're relying more on the performance of the portfolio than on individual names. We'll have a broader portfolio, will be more equally distributed over those positions.
and I would
Um,
tell you that to go even so, and I know that you've thought about a lot and written quite a bit about sort of like, and we've talked a little bit about the behavioral aspect of things, and I know that like if I just 90% of the time when I have a desire to make a move on the portfolio, if I just do nothing and resist the temptation, that is the right thing to do. And I would tell you that, I think that I now work as part of a team of 5 people. And it's only now, 25 years in, that I really have, I believe, the kind of the right team in place. And in a way, because I was so busy doing other aspects of what I needed to do in order to run the business, I didn't have time to trade. And more often than not, that helped me rather than hurt me, because not having time to trade was exactly the right thing, basically. So, but
Well, I have done
yeah,
some unpublished research where I just say, let's just never sell and see what happens. And it is extraordinary what you end up with at the end of that. It's sort of, you tend to have this Kelly weighted portfolio where the things that
yeah.
have worked the best and are most popular are the biggest in your portfolio. You'll look like a Kelly weighted value investor,
Well,
even though it's purely accidental.
that's what my portfolio looks like. It's so the top, so 60 or 70% of the portfolio is in 7 or 8 positions. And it's not because they were put in at that level, it's because they've grown to that level. It creates its own set of problems because somebody joining my portfolio now has to ask, why am I joining now? And I've had situations where things have gone up 5x. I haven't sold any of the shares. And then they draw down by 50%. I've also had situations where something's gone up 3 or 4 times. I've sold and then it's gone up another 5 or 6 times. And so that set and forget is a very, very powerful. You have to be in the right kinds of companies in order to do it. And I try to only buy those kinds of companies, period. Um, but it's only something that I've come to over the last year or two is that when something's gone up 5 or 6 times, I have to look at it very, very carefully because of course, we all want it to be that stock like LabCorp of America or Berkshire Hathaway or American Express that just, or McDonald's over the last 20 years. But what is the probability that it is one of those things? Or is the probability that actually was a flash in the pan that just got ahead of it? And your behavioral stuff with like the longer you own it, the more you think you know it, the less you can predict, the more likely your perception of risk goes down. And so one of the hardest things is to sell something that I've fallen in love with because it's so awesome, because it's gone up so many. And I have a well-known luxury brand automobile company that is very well associated with the color red, who just got what is his name? The driver from Mercedes to drive for them, Lewis Hamilton. And I know that it's an amazing brand. It's just an amazing brand. But at some point you have to say, all right, and I'm kind of doing that there. And boy, is it painful because it's not like a divorce where the relationship sours and then you have to say goodbye. Not that I've experienced that in my life. It's you're deeply in love,
Yes.
and you still have to
Yes.
say goodbye. It's like, um,
Impossible. But my hat is off to you for doing that.
well, we're doing it actually because I had the opportunity. I'll just a little bit of self-disclosure before I would go to my last question, just to find out what you've been reading recently, in addition to Sun Tzu, and then I'll have to jump off. But I had the privilege. So a classmate of mine is Chris Hahn, who runs TCI, and he used to sleep on the floor of my apartment. It's so funny. And I got invited to a meeting where he was meeting with investors, and I just sat with him while he talked to a group of about 20 or 30 investors, where some nasty Swiss guy says, well, if you were classmates with him, why aren't you as rich as him? Something like that. And I was like, you know what?
Randomness
It's
luck.
fine. But yeah, I was blown away. I learned so much. So he stays in these, he's got 200 companies. That's it. And he's constantly making the reevaluation of, you know, given where we are right now, what is my expected return over the next 4 or 5 years, or even 10 years? And the harsh reality is that something that's gone up 7 times is less and less likely, to your point, to continue to go up 7 times. And so, he rebalances and I think in a very, very smart way. But I learned a lot from him and realized that I had to do it myself. And ideally, the only thing you have in your portfolio are these rocket ships that are going to do 200x. And all you're doing is rebalancing from time to time from one rocket ship that's just had a spurt to another rocket ship that's about to have a spurt, if you like. So, but that's the really tough part. So anyway, that's just fun. And for the listeners' interest, I have a hard stop because we scheduled this just before something that I have to go to. So this is not as long as I would have liked. But so let's just tell me what you've been reading recently. And I haven't even, in America, I need to learn to pronounce your name right. So is it
It's
Tobias would be the German, or Tobias?
Tobias is
Tobias. There we go. So at the end of an
is
hour,
the
I figure out how to
it's
pronounce your
it's
name.
Old Testament. It's Old Testament guy.
So
Uh,
Tobias, tell me about what you're reading and what's exciting you on your bedside table.
I read very junky books, to be fair, but I don't know if you know Patrick O'Brien, who does the Aubrey Matcher, and Master and Commander was the movie. But then there's another gentleman called Bernard Cornwell who he does similar sort of. The man is prolific. It is
Yeah.
extraordinary the amount that this guy has written. He's in his 80s. He's still alive. I think he's British, but he lives in Cape Cod, and he writes these books about this sort of. He's got a variety of series, but he wrote the Last Kingdom, which was a net turned into a Netflix
Hmm.
show about. It's all historical fiction. I like historical fiction where
Right.
all of the events are he's, historically accurate. All of the events are true, but the protagonist is fictional, and he
Yeah.
just puts him and he puts
Scenery.
various different ones. There's so much fun. I have no idea how many. I read Aubrey Matcher, and there's like 22 of those books. I
Yeah.
read them through, and then I read them through immediately again because that was
Really.
so great. And then Bernard Cornwell is my current that my current infatuation. I've read he has Sharp. Sharp is a an officer in the British Army in the Napoleonic era, and
Right.
then there's Last Kingdom, which is about 800 AD, Alfred the Great, as the British expel, as the English, well, they're not even English at this point, but it's the making of England as they expel
Yeah.
the Vikings.
You
And then
know,
I've read, it's
I'm
fantastic.
kind of, have you heard of a writer called Hilary Mantel?
I haven't,
Bring Up
but
the
I'll take
Body.
it.
So she's a very acclaimed British historical fiction. Is same idea, extremely reputed for having extreme historical accuracy. So she writes about people like Henry VIII and Oliver Cromwell, and it's kind of like
I
you
love it.
there. And the people who know about this stuff say that there are a lot of historical fiction, like I don't know, The Crown on Netflix, where people say this is not historically accurate and it's a bastardization of history. Whereas this Hilary Mantel, they say no, she's right on. The historians love her, and I'm envious of you because I've tried a couple of times to read her books, and I just find it really hard. If it's a historical event, I don't want to have some fictional character who's observing it for me. It's just I can't do it. The only time that I can think that I've kind of did it was I on a family trip to the Antarctic a few years ago. I used the crossing over to the Antarctic to read War and Peace, which is there's a part of it that's historically accurate. But what he does, and in War and Peace, actually, you do have fictional characters who interact with real world characters. But
There's a great
uh,
line from Warren. There's a Kutuzov, they put some words in Kutunov's mouth where he says that Russia will soak up Napoleon like a sponge, something like that.
yeah. What about Ukraine? Is Ukraine going to soak up Russia like a sponge? It's so funny that you mentioned Kutuzov. Yeah. So you've read War and Peace, obviously,
I
and
have, yes. Just so I can say to people that I've read it. No, I actually enjoyed it. I didn't think it was. It's
I
a
feel
long, long
like
book.
I feel like I became a wiser person after having read it. And there's some interactions between Kutuzov, if I remember correctly, and the Austrian general. There's this beautiful line where I'm not going to try and actually repeat the words that I read in translation, but um, Kutuzov says, he says, I'd like to come and support your troops, but dog ate my homework. And the way Tolstoy describes it is that you know, Kutuzov told these lies, knowing that he was lying, in a way that he was saying, "You, Mr. Austrian general, know that I'm lying, and I know that I'm lying, but there's nothing you can say or do to contradict me, and you're just going to have to accept that this is the reality." And I was like, wow, and I don't know if that conversation actually happened, but of course, the Russian and the Austrian forces were utterly routed by the Napoleonic forces at that battle of. I think it's actually describing the Battle of Austerlitz. I'm not sure, but uh,
I would have guessed Austerlitz, yeah.
how often are you in New York?
Uh, Rarely, but occasionally.
And do you like it?
I like the energy of New York. I think that it becomes a little bit too much for me
Yeah,
after a few days. I like
yeah,
this place, LA is a different. Nobody's really
vibe.
interested in what I do in LA, so everybody's interested in their own little industries here. And so I say that I tell people what I do, and they don't want to discuss stocks with me. They want to move on to somebody else, which is ideal.
And how often are you in Australia?
We didn't go. COVID made it tough. We didn't go back for about 5 years, but we try to go back about every 18 months or so because I
Yeah,
have brothers and sisters. I have a brother and sister, and they have kids, and I like my kids to know their cousins
yeah,
and so on, and their grandparents.
absolutely. And you read on Kindle or on physical book?
Kindle, I love Kindle because you can highlight on Kindle and it's backlit. When we had babies, my wife didn't want me to turn on the light to
Yeah,
read, so I got the Kindle then. So
yeah.
I just find it so much easier to read on Kindle.
I
And
still like.
you can make the font bigger, which is good if you've got old eyes.
Yeah, you could just get glasses, but so if people want to find out about you, if people want to buy your fund, what's the best way to be in touch with you? What's the best way if they liked what they heard and they want to follow up with you? What's the right thing to do?
The tickers for the funds are ZIG and DEEP. They're just bought like a stock through your brokerage account. You can contact me by email to Tobias at acquirersfunds.com. I'm on Twitter at Greenbacked, GREENBACKD. It's a funny spelling. or the books are all available through Amazon. If you just search Tobias Carlisle, they will come up. My last name is got a silent S in there. It's the Carlisle.
And
That's it.
got to be on every value investor's bookshelf. Otherwise, you're not a real value investor. So here's just one.
The new
And
book, Invincible, is the one that everybody should read.
this is the upcoming one.
The new one, yeah, the
Oh,
one
I'm
that's about
looking
to come out.
forward. I'm looking forward very much to reading it. It sounds like it'll be amazing. And I haven't read much Sun Tzu. So, uh, uh, Tobias, it's a pleasure to have met you, to have had you on this show, if I can call it a show. Thank you, listeners, for listening in to the first conversation that I've had with Tobias, certainly not the last. And I'll leave you with the last word.
Well, thank you, Guy. It's been my absolute pleasure and honor, and I hope to have you on my show at some point where we can go deep on the way that you think about the same things.
We'll see where we go. It's going to be fun, but thank you for joining me.